Hello and welcome to Across Borders here on SOUQ News Television, a program that brings you not just migration and human-related stories. And of course, this is a program that helps us go beyond cross-borders activities that impact us and the economy. My name is Grace Komolafe, and today we shall be dissecting the core mechanism that governs global finance, the T+2 settlement cycle. This refers to the period it takes to finalize any stock transaction, ensuring the money and the ownership transfer officially. For African markets like Nigeria, understanding T+2 is crucial. How does this timeline affect risk, investor confidence, and the flow of international capital? As a global market moves faster, is T+2 a necessary safeguard or an outdated barrier to regional growth? To have this conversation, we are joined by Kehinde Adeaga. He is an economist and fit for a topic like this. A very good morning to you, sir.
Good morning, Grace.
So pleased to have you.
It's my pleasure to.
Yes, despite the struggles, challenges, at the end of the day, we're able to make it.
Yes, it's even better to be in the studio than the virtual thing because of the internet and the network crisis that we've been having in recent time.
I agree with you.
It's good to be here now.
Thank you so much. Thank you. And so we're just going to get into it. I want to ask you, T+2 settlement or T+2 transaction, what exactly does this mean?
What T+2 means in the capital market is transaction, date, and delivery, meaning that if you want to buy any stock, you place your order, and the next day you get the purchase. Of course, it's a case of you having the money to buy in the depository, and then the delivery also is also in the depository, where once you made payment, you get instant payment. Instant delivery to what you are looking for. Before now, we were operating we started with a T+5 transaction cycle, and then we moved to a T+3. While we were operating a T+3, I recall that while I was in the US some years back, they were operating T+5. And as at that time, we were operating T+3. And I was wondering, in fact, to the point that the Director General of the US Securities and Exchange Commission was asking, is it really true that we're operating T+3? And I said yes. And he tried to know whether we actually understand what T+3 was, because we were journalists that went for an exchange program in the US then. And I told him yes, that we are just there. We know it all, because what that means is that you do a transaction today, in 3 days you get delivery, and a week after you get payment for that transaction. And so he was shocked and surprised. So when we now heard, when the CSCS, that is the Central Security Clearing System, now said they are ready and able to go for T+2. Wow. It was amazing news, because it means that there is the level of transparency is increased, the level of trust is increased, the level of delivery is increased too. So what that means is that you make a transaction today, you are hopeful of getting payment or backup for whatever you are buying almost the next day. It's as seamless as it is, so to say. So I give kudos to the management of the Central Security Clearing System, the Securities and Exchange Commission, and the NGX, that is Nigerian Exchange Group, because these are the three key stakeholders in ensuring that we have a T+2 cycle transaction in Nigeria. And of course, when it was launched, the managing director, CEO of CSCS, if you permit me to mention his name, Mr. Aruna Jallo Waziri, did say that come next year, we'll be operating T+0, meaning that you do your transaction today, you get service or payment the next day.
So I'm going to ask you that, because we're going to get to that question. And you're saying that we're going to be operating T.0. We're going to get there, because I want to understand, are there no dangers? Are there no challenges?
There are challenges, but they have looked into all this. And that is the reason why they were able to launch T+2. They have put together a system that will mitigate against any unexpected challenges.
Okay.
Because infrastructure is very key in this regard. And so they from what they have said, that it took them time. Ordinarily, while they were planning or tinkering with how to start this, ordinarily they should have stopped transaction, so to say, but they didn't. Why? Because they had to do it overnight, almost every day, 24 hours, not stop. Yes, and so they were putting all the infrastructures together so that it doesn't affect transaction on a daily basis. And at the time they were able to come up, they were sure that this transaction, there won't be any itches. They came up to launch it.
Okay, so let me ask you. So presently, Nigeria, we're running the T+2 settlement system, and you have mentioned that we have countries that still operate T+5, plus 5.
Right,
So are you saying that we are far ahead of all of this?
That is what it means. We are ahead of.
And what does it mean to the global stage?
Well, when it comes that means to the global market is that our market is a seamless market where you can do your transaction without any hitch. Because, for instance, the T+2, what that signifies is that you place your order today, your broker buys or sells for you, and then the next day, which is the second day, you get payment for it. There can never be any better time than this. And that will increase the volume and value of transaction in the market. Because, for instance, if the total market transaction in a day, we have, just recently we saw a transaction of over 2 billion shares being traded in a day. And the next day, they got value for the transaction. So it's a case of saying there's no hidden place for any operator in the market to say, oh, I didn't get this stock to buy, or I didn't get this stock to sell. That's the reason why you cannot get your money. What it means is that there's transparency and efficiency in the marketplace. So for all the operators and the regulators in the market, they are on their toes to ensure that transaction is seamless, and then investors are better for it.
So talking about investors, how does the settlement timeline, how does it affect small investors and institutional traders across borders?
Well, it's an almost immediate thing. Both small investors and institutional investors. The important thing is you are placing your order in the market space, and that transaction is going almost online, real time. And so you get value for it. So there's no distinction between small investor or institutional investor. In as much as you are doing any transaction on our market, you are sure of getting value for for the transaction you are making. And so it's better for us. And for me, I think investors should be happy because of this transaction cycle. Because what that means is your money is not being kept somewhere, or your money is not being kept somewhere and somebody is using the money for other things. So brokers these days will not tell you that, oh, sorry, because the transaction system is a long period, I can't sell or I can't buy for you. No. What that means is you book in, you place your order, and it is kind of purchased for you. So you get value for it. That's the important thing. I mean, the important aspect of the market.
All right. So let's look at this. In a way, you've mentioned risk and trust and all of that. But I want to ask, when it comes to T+2 transaction, who is more exposed to risk, especially during settlement period? I want to mention, like you've mentioned broker. So I really want to know brokers, agents, and the dealers.
Yeah.
Who is more at risk?
Well, I find it difficult to say this person is at risk more than the other, for the simple reason of the fact that an investor does his or her transaction through a broker who is an operator in the market. And in as much as he's doing that through such a broker, the broker also knows that the regulator are watching. And so there's no, except if the investor does not give an order so to say. For instance, you want to buy a certain stock, and you did not tell your broker the stock you want to buy at whatever price you want to buy or sell it. So that can cause a delay, and that can lead to a risk. But if there is instruction as to what you want to buy and what you want to sell, it will not affect, or it will not bring any risk in whatsoever way. So I think it's better for both operator, investors, and everybody in the market. So I don't see any risk attached to it. The only place where we could find risk is from the operator, that is the Central Security Clearance System. And they have said the infrastructure they have put in place to do this is such that is except there is a total blackout. And you know, they already have a backup, so to say. Okay. There are power generating system that can power the transaction, I mean, the engine they are using. So they are not solely relying on the national grid or whatever for them to be able to go online. Okay. They have the backup. So the gen are there for them to say, oh, there can never be any failure in terms of transaction. Okay. So there is no risk, so to say. There is no risk, so to say. So to say, yes.
I want to believe that there is practically no business or operations that there are no risk attached. And that's what I want to ask. I want to believe in a way there would be one or the other. When a transaction fails, or when there's a delay, who exactly is held responsible? Who's been held responsible? Because I want to believe there is no way. It could be minimal. Of course, yes,
there will be risk.
So who's been held responsible?
It's going to be minimal. When there is a risk, they are able to trace where that risk comes from. Okay. Either from the broker or from the platform, which is the NGX. Okay. For the CSCS, what they are providing is to say, whatever volume of transaction you are doing, we are ready. We will ensure that that transaction scales through with our infrastructure. And of course, with this infrastructure, they have it linked with both the regulators and the operators in the market. So when we are looking at the risk is minimal, like I said, and the only way where you can get that risk or shortcoming will be from the broker, who probably may not have entered in his logbook the transaction of that investor. Because there's no way. You have an investor who has ordered you or who has instructed you to buy or sell on his or her behalf. Now, the onus lies on you as operator, which is the broker now, to log it in. And that can be done, even you do it online. The logging in is done online. So once you do it online, you get to the floor. You don't even need to be on the floor to do your transaction. You can be on the road and be doing your transaction because you are linked with the platform already. So in buying or selling, you can easily buy a stock for your client or sell for your client at minimal risk. Okay,
so you have brokers who are the middlemen who does the run around and all of that. And now we have a lot of Nigerians abroad that are investing, in all of this. So I understand technology, like you have mentioned, you are away, you don't need to be on ground. Yeah. But are there things you think those abroad especially should be conscious of because they are not in the country? And you feel the brokers as well need to pay attention to ensure a smooth running, operation?
Well, I think what those who are outside the country need to pay attention to is what are the prices of these stocks and what are the bottom line of these stocks, of these companies. Because we have seen a situation where somebody outside the country gives instruction to his or a broker to say, buy these stocks for me. And that is the only instruction he or she has given. He didn't go to the next level of saying, buy it at this price. Because pricing is very key. If you don't tell me to buy at a certain price, I can buy it at any available price. So that is the area where we can see some shortcomings in respect to transaction. For instance, if I say buy a certain stock at a price, you already have your full information. Okay. And so with the T+2 now, there's no way you can extend the buying of that stock to the third day. You will get on the floor a buyer and a seller. Even though the price may not be the same, but there will always be bidders and offers.
Okay.
So in that regard, once there is an offering and there's an offering price and there is a bidding price, then you match it with what you have as a broker to be sure that you are buying or selling on behalf of your clients. So once that is done, you are sure of getting delivery.
Okay.
So there's no too much risk to that. But as somebody who doesn't stay in Nigeria, who doesn't monitor, because it's very key, you need to monitor a market. And then I've seen some situation where some who live abroad are pegging our market with their own market. But what they don't understand is here in Nigeria, and of course in every market, information is key. In every market, information is key. How regular or delayed the information is another issue.
Okay.
For instance, if a company is submitting the financials to the exchange, of course it's real time, and you who wants to buy from abroad, you are not privy to that information. You may be buying either high or low. Okay. But once you have information to that regard, you may decide to say, okay, I want to buy this thing at this price, either high or low. If the price you are offering is okay and the broker could get it for you, fine. But if the price you are offering is below the market price, you are sure not going to get it. So that in that regard, there could be delay because your broker will tell you the price you want to buy this stock is not available.
Okay.
So it's not a case of whether he wants to play on you. And you can also see it online that this is the price available for that stock. It's not a case of whether, I've asked him to buy, he refused to buy. No.
Okay. So
that issue is gone.
Yes, I'd like to speak to cross-border trade and regional integration. You know, African markets operate with different settlement circles. And I want to say that how does this affect cross-border investment within ECOWAS, you know, especially AFCFTA? So I'd like you to speak to that.
All right. For cross-border transaction, we all know that there are some exchange factor. I'm talking about the currency factor. But in the case of T+2 now, the currency, the exchange rate has nothing to do with it. Because what it means is that, for instance, Naira today is about, to the dollar, is about 1,470 or 470 something to a dollar. Yeah. And you are buying. Naturally, you are not buying with Nigerian Naira. You have to exchange the currency, which is the national acceptable currency, which is the dollar. Of course, you would have known a stock is 10 Naira. Let's assume a stock is 10 Naira. It means you have done your transaction, your exchange rate, and then you send your money to your broker. The money is in the custody of the broker. Because any broker who wants to buy or sell for you must have the money before he or she can buy. Without the money being settled in his or her account, before now, it could be, somebody can say, I'm buying on credit. There's no way you want to buy any stock on credit anymore. Your account must be funded. That's the number one thing with the T+2. Your account must be funded. Because your account is funded, it means you are ready to buy. And once you buy, the one who is selling also, he already knows that he or she has the stock in place so that he can deliver. So for cross-border transaction, it's seamless, so to say, because you can instruct your broker, buy this thing today. We just have time difference in the different countries. But once you instruct, it is that date instruction that matters. It is not the next day. If you are buying, today is Tuesday, for instance, and you want to buy, our market opens from 10 and closes by 2:30. Okay. Now, if you are buying, you must log in within that period. And of course, the exchange had decided to extend the time for transaction also. The reason why they extended the time for transaction is because they have put into consideration that there could be other people who wants to buy outside Nigeria, whose time different with our Nigerian country. So it gives you the opportunity of buying the same thing a local person will buy, the same price. And the only price that will be available is somebody, we have different people who want to buy or sell at every particular time.
Okay.
One may want to sell at 10 naira, another may want to sell at 15, another may want to sell at 12.
Let me add this. Doesn't mean that when that window closes, does the prices change?
No, it doesn't change.
Okay.
What it means is when the window closes, when the market closes here, because there is an extended period for transaction to come up, and it's done online, it's still captured.
Okay.
It's just that the closing price will be placed in one length, and the the requesting time, price is on the other end. Why? Because, for instance, like I've given the scenario where you have three different prices. Now it closed at, say, 15 naira. The opening price is 14 naira. So you can see the difference. It's 14 naira. Whereas some people had sold also or bought at either 12 or 13 naira. So now when the delivery time comes, the one who bought at 13 naira is seeing the statement of his transaction from his broker. Okay. But what you'll be seeing on the platform of the exchange is the closing price, which is the 15 naira. But that is not to say that your broker bought for you at 15 naira. It may have been able to buy at 13 naira because different people are offering at different prices. So if he bought for you at 13 naira, you will see it in his logbook. In his system, it will be showing to you because they all have what we call transaction, transaction record, where if you are in doubt, they will show to you. And then if you are not still satisfied, you can exchange it. You can go to the exchange to confirm, to cross-check. In that exchange, when you get to exchange, you can see the closing price and the price the broker bought or sold for you differently. So we cannot, and that is what is happening all over the world. There are opening price, there are closing price. So depending on what prices you are getting, it ensures that you are not play out or cheated by your broker.
Okay.
So in the past, a broker could buy and warehouse and resell at a higher margin in the past. But under these circumstances, it is difficult.
Okay.
The moment you want to buy to warehouse, you must have the financial muscle to do that. And once you have the financial muscle to do that, then whoever wants to buy through you, the person should be ready to buy at whatever price you are offering.
Okay. All right. Yeah. So let's talk about harmonization before we call for break, because we'll be going for break shortly. I want to ask that, what does harmonizing settlement circles across Africa mean for seamless trading and capital mobility? What does this mean?
You see, what that means is that they have been able to put together the pricing mechanism and then the transaction mechanism to ensure that no investor is played out. Operators also are not played out because the system we are operating now is such that it's transparent. Everybody can see it. When they say T+2, you already know transaction stroke delivery time. And so they have harmonized all these things together. In fact, the infrastructure in place now is such that any transaction that is being done, especially on the floor of the exchange, through your phone, you can see those transactions, especially if you have logged in into the exchange platform. You can click in and check. Even as I speak now, I can do transaction on my own through my mobile app. But in doing that, do I have the experience? Do I have the knowledge? If I don't have the knowledge, what is good for me is to do it through a broker. And once there is a problem, I can hold the broker responsible.
So this is what we're talking about. Now you see.
Yes.
I mentioned earlier who is held responsible.
Yes, but you see, if I do it on my own, whichever way I'm going to do it, I'm still going to pass through a broker who will approve the transaction. Now, if I'm doing it on my own and the broker is approving the transaction, what the broker has done is to say, oh, you are doing this thing through me, not me as a person now trading on my own. I'm doing it through a platform. Whether you like it or not, you must have a broker as an intermediary between you and the floor. The floor that I mean now is the platform, the trading platform. And so that's the way the CSCS can capture who are doing transaction. Because, for instance, I don't have a link with the CSCS, the provider of that infrastructure. I don't have a link. Those that have the link with it are the Securities and Exchange Commission, the Nigerian Exchange Group, the brokers, various brokers, the registrars, because these registrars are also part of the system. They are part of those who will deliver the stocks that are being bought or being sold. So all these groups are together. They have been able to bring them together under one umbrella. Let me use one umbrella. Because under the platform they are operating from, they already know that this transaction is coming from this place. And those who are in charge, that is, the one who is the custodian of that transaction, is the CSCS. And so the registrar can see transaction, the broker can see transaction, the exchange can see transaction. The only thing that the investor will see, the transaction the investor will see, will be through the exchange board. That is the only public space that they can see as individual investor or corporate investors. That's the only way you can see it. Otherwise, it's something you also can check online. If you want to access any transaction, you can do it online through the CSCS or the exchange. And of course, all the brokers too are online. So if you have your broker, you can go through their website and check their transaction, and you'll be sure of the transaction they are carrying out on your behalf.
I'd like us to move to the digital and technology and finance, if I'll put it that way. So, with fintech and digital clearing system rising, is T+2 still efficient or already becoming outdated? I remember you mentioned that there was a time you traveled, you had a conversation to the US, they were operating T+5, while Nigeria was operating T+3, and you mentioned that we are looking at moving to T+0. But I am asking, T+2, is it outdated? Probably want to look at it from the African angle collectively. What's your take?
No, it's not outdated.
Okay.
It's just trying to move fast with the technology you have. What CSCS has been able to do is to say, with the deployment of the technology we have, we are able to accommodate T+2. And so, aside from that now, they are also futuristic in the sense that they are already thinking ahead to say, can we do a T+1? And from the comments and from the messages coming from CSCS, they are ready to do T+1 come next year. And this will be maybe around March or April, which was what they are quoting them in their words, that they are likely going to move to T+1. And when we move to T+1, it doesn't mean that the T+2 is outdated, because some countries are still operating T+2, T+3. Even some countries are on T+5 as we speak, depending on the infrastructure deployed. For Nigeria, they have been able to deploy a sophisticated infrastructure that can accommodate that transaction. You know what this T+2 is all about is putting all the transactions together and ensuring that the delivery and the payment system works the same way and almost immediately, seamlessly. Because for you to buy any stock on the floor, you must have the fund. It's not a case of you buying and then you keep the seller for a long time before you make payment. No. Once you buy, you are paying. It's like a cash and carry thing now, like the normal market where you go to buy goods and services and you pay for whatever thing you buy and you walk away. It's the same way they are looking at it. That let's get to that level where you make payments, you get delivery. And of course, once you get delivery, it means you are getting value for the money you are spending. Take, for instance, you want to buy stock at 20 naira and you had made your payments and the stock is not delivered to you. Within that period that is not delivered to you, you could have used that same money to achieve some other thing. So they have put away that gap to say, make payment, collect. So that is why you see they are saying T+2 now, and we are just some few months to the new year, and they're already thinking of T+1. You get it, few days to the new year into 2026, and they have said by March or April they should be on T+1, meaning buy, deliver. Okay. So there won't be any itches, and it is simply because they have looked at the future, and they have incorporated infrastructure that can meet that need, so to say. Okay. So we won't have any problem. Okay. The only problem we may have, and I don't see it as a problem because you already have a backup, which is the light, the energy. So once you have for instance, you are transmitting now, you are not on power holding or whatever. You are either on the generator, alternative power supply. Yeah. Why? Because you don't want any breakout. It's the same way. So for you to do your transaction, you are sure that nothing will stop that transaction. And of course, you may be looking at it from, the service provider, the telecom service provider, they already put that also into consideration. So for the period under which transactions are taking place, the service provider, they are top-notch in that regard. That is the telecom and the power supply. These two are the things that can hinder transaction flow. But because these two have been put in proper perspective, I doubt if there will be any itches.
Okay, so while I want you to talk about automation, blockchain, and all of that, so I'm just in my head, I kept thinking, while we're thinking of moving to T+1 or even T+0, in the course of my research to understand T+2, so I realized that it's actually meant to not just the period to move the money, but also to understand that, okay, this money is there, this person has the money, and this person has the products to offer. Exactly. So if we are now moving to T+1 or T+0, where everything becomes fast and all of that. So are we beginning to look at automation, if that's the word now, to ensure that, okay, there's something that is doing the complete check and immediately to say, okay, this thing is there, we can move it. Or I'm still very particular about those little challenges that could occur because I feel it's a way to avoid fraud, so where somebody's kind of saying, oh, I'm buying this and the funds are not there. Or someone is saying I'm selling and the products are not there. Yeah. So what do you think? I want to ask you about, automation, blockchain, or even AI shaping the future of settlement circles in Africa. And in all of this that I've explained put together, what do you think?
Well, you are right with your skepticism. But let me assure you, when we get to T+1 or T+0, what that transaction simply is saying, for you to sell, you must have the product. For you to buy, you must have the fund. And so it goes hand in hand. There won't be any case where the buyer does not have the money, nor the seller does not have the product. Both of them have something to sell and to buy at almost the same time. Now, the deployment of the infrastructure that is being used is such that it can detect error. Detecting error means that maybe you supply and then you withdraw.
Okay.
The moment you do that, of course, that transaction will not go. It has shown a red signal that this person does not have it. And so before a broker gets to the floor, when I say floor, I mean the trading platform. Before he gets there, he already knows available stocks that he or she wants to buy. And then what he wants to buy, he already knows that he or she also has the fund to meet it. You cannot want to buy 1,000 units and you have money for 50 units. It's not visible.
Okay.
You must have fund for that 1,000 units. And then the one who is supplying must also have that 1,000 units. I recall in the days when we were operating a call-over system. Call-over means there is a chairman. It was not automated then. There's a chairman like this sitting in front, and brokers are seated around him, and they are showing signal to say, I'm bidding, I'm offering, through the voice and show of hand. Now, the call-over chairman sees who is offering or hears who is offering, and he hears who is bidding or sees who is bidding. For instance, if I show my hand that I want to buy, he records with my hand. And then, at what price do I want to buy? By voice statement to say, oh, I want to buy it at certain amount, he records that price. Of course, as he's hearing the voice, he's recording.
Okay.
The cost, the price you want to buy, and the unit you want is recording. And at the end of the transaction, when he wants to give it out, that is allotting.
Okay.
It will now say, I hear so-so house asking for this at this price. And I hear so-so house offering this at this price. So they merge it together. And then transaction takes place.
Done.
But we have gone past that level now.
Okay.
We are in the level of automation whereby it is only your system that talks. So it is on the basis of first in, first out. You are offering, remember, you are not, the market is open to all the
Everybody
brokers.
is broad.
Yes. So you may have 30 brokers in a day doing transaction, 100 brokers in a day doing transaction. And you may have about 30 or 20 people demanding for a particular stock, but different prices. So your engine puts in your price. There are instances where when you put in your price, you discover that there are prices that are requesting, there are other stock, brokers who are requesting for the same stock above the price you have put in. So it is left for you.
What do you want to sell?
To say, oh, I will increase the price. You know, there are some stocks you want to buy at all cost, regardless of the price. So, because the investors say, whatever price, just get that thing. That is the instruction they have given you. And there are some investors who tell you, if the price is above this, don't buy. Some will say, I want the price within this range, buy. So, if you are in that position and you see your other colleagues who are offering, of course, somebody wants to offer 1 million, another wants to offer 500,000. The volume that they are offering is dependent on the price. So if the one who is offering 500,000 is saying, I want to sell for 20 naira, and the one who is selling 1,000 is saying, I want to sell for 20 naira, definitely the one who has 1,000 will not get his transaction at that same 10 naira. Because, why? He has just limited amount. The one with 500,000 has much. So that one will get purchased ahead of the 1,000 own. So now it is the 1,000 own that will now be like a support in the event that somebody didn't get and the person is still willing to buy. So it will get it at that. So these are some of the things. Because give or take, the engine will supply the information that is needed. Yes, it is the people that key in the information and to say that they have an understanding of what they want to buy or what they want to sell. But the key issue in this whole thing is availability of the fund and availability of the stock. So these two are together. Without these two, we cannot arrive at this T+2 that we are talking about.
Oh, okay.
So it mitigates against fraud.
Okay.
It mitigates against sharp practices on the floor.
Okay.
Because somebody can say, okay, I want to sell. I have this much to sell, but he may not have it. You know, he can, because he sees that there are demand for it, he can now say, oh, let me quickly supply it. No. From the moment the transaction starts or the market opens, you log in what you have. Although there is room for you to increase or reduce what you are offering.
Okay.
If you have other clients who comes to you before the close of transaction, they'll say, oh, I just remember I needed to sell this thing. Can you help me sell? Of course, he's already on the floor trading, so he keys it in as an addition to what he wants to sell. So, and the pricing also will be in there. The price for this is this, the price for this is this. So whoever wants to buy will want to buy within the quoted price. Otherwise, if you quote out of the market, you may not get it sold at that day. It means that transaction didn't take place. But the moment a transaction takes place any day, you get the delivery and the purchase.
All right, so we'll just move to the next question. So obviously, would say from this end, Nigeria, I mean to say that we're not doing badly when it comes to when it comes to trade. I feel we just need more enlightenment to let people understand what this trading is all about. Because I want to believe that there are different information out there. Of course, you see people even on social media pushing all sort of information, but you see a whole lot aligning with trading most importantly. So let's talk about Africa generally. Nigeria is not doing badly. You understand? So I want to ask, many developed markets are moving. They are moving towards T+2, where we already are, while some are moving to T+1, or even faster than that. Some probably might be thinking of T.0 already as Nigeria too. Nigeria is also thinking.
There's no market here that is operating T+2.
Oh, so Nigeria is still there. But of course, a lot of them are thinking of moving, just the same way Nigeria is thinking ahead. So I am saying Africa as a whole. Nigeria, we are not doing badly, but Africa as a whole, do you see the continent also having this energy, moving faster?
Well, what I would say in that regard is, because we have started it, they will want to think or believe that it's an easy thing that they can also do. But they need to come and learn. Like we also are learning from other aspects.
Okay.
So if they come to learn from us, they will know that they can get there. But if they feel they can do it by themselves, they can also do it. It all depends on the will. If they have the will and they have the fund to support it, it will work. If the CSE had to tell you how much it has cost them to arrive at this, it's in billions of naira. But they are not going to tell you the cost. Reason being that possibilities are that people could start thinking, oh, it's a waste of money. But in terms of the benefits, the benefit far outweigh the cost, because now we can do volume of transaction without any hitches. For instance, somebody comes, like I said before, that we have done a transaction of about 2-point-something billion shares in a day. Why were we able to do that? It is simply because the deployment of the T+2 transaction system, whereby the market can accommodate no matter the volume that is put up. And then the fund can also support it. The 2-point-something billion that was transacted the other day, it was because the funds were there.
Okay.
Otherwise, it would have been difficult. Because if the funds were not there, the seller wouldn't have been able to say, oh, I want to sell this much. Because it's a case of putting together these two factors that I talked about. So for Africa countries who are also deploying some infrastructure, they need to look at it holistically to be sure that they can deploy the infrastructure we have deployed and it can work out for them. And different clients with different issues. So in our own case, we may say power supply is an issue, but the operators or the regulators in the market don't see power supply as an issue because they already have a backup, so to say. And that backup is what is helping out now. So you can imagine putting up your generator for 24 hours because you are doing a transaction that you don't want any itch to affect it. So if you now have to the cost of that generator in providing that energy is huge. But they are not looking at that. They are looking at the seamless transaction. And this will attract more investors into the market. Because, for instance, we talk about the African country, we talk about developed and other developing countries. The moment they know that they can do transaction on a one-day transaction and get paid for that transaction, they want to come in. So it will attract more investors into our market, which we are already seeing. Before now, of course, it's a case of up and down. We've had more of foreign investors some times ago over the local investors. And then at a point, we had more local investors than the foreign investor. When we had that, it was simply because of corruption and insecurity. And you know, for every market all over the world, once your investment can be guaranteed, you want to be there. Because it is the guarantee that attracts you to say, oh, okay, I want to buy or I want to sell in this place. I know I can get back my money. For instance, if you're a foreigner and you want to buy or sell here, there is opportunity for you to repatriate whatever thing you have sold from here. So there's no case of say, oh, you have sold, then the repatriation will be problem. No. So these are part of the attraction that the T+2 is bringing to bear for all participants in the marketplace.
So let's look at policy and market reform. You know, this is very important. I wanted to also mention infrastructure, but in a way you have mentioned it. And I want to believe that those infrastructures are not there. There's always a way to get back whatever you have invested into whatever business you are doing. So I wanted to ask, the question I'm asking now, probably we're just going to do this in 2 minutes because we are wrapping up. What reforms are needed in Nigeria's capital markets ecosystem to make cross-border trading easier and more efficient? Despite all you have mentioned, what again, when it comes to policies, when it comes to reforms, what are those things that needs to put together for cross-border, easy business?
As part of this, the Securities and Exchange Commission, SEC, had also improved the ISA, that is Investors Securities Act, now 2025, over the 2027 ISA. The reason they were able to repackage it is such that they looked at what could have been hindrance to investors participating in our market. And they have seen that there's a need for protection, number one. There's a need for transparency. There's a need for availability. So they are provided these things together. And these things are helping to shape our market for the better. Because the ISA now takes care of so many things in the marketplace, whereby any fraud in the market can be detected. And once it is detected, there's a penalty for it. Either you are an operator or you are an investor. Once you are found culpable, there is a penalty for any transaction, any misbehavior in the market. And so because of that ISA that is launched and signed into law, it gives our market what I would call trust and transparency in the eye of any investor globally. Because these are some of the things that make an investor willing and ready to come to your place. In as much as he or she knows that the transaction he or she is doing is protected, devoid of any discrepancies or any fraud, that person will want to come. You can imagine if a foreigner wants to buy now, and he buys and is not getting value for what is being, and then there's no penalty for it. There's no justice. It will go away. Regardless of whether he has lost or not, it will still go away. But the moment he knows that he will get justice for whatever misrepresentation that is done, or fraud that is done through on him. He will get justice for it. He will want to come. And so that is what I would say is bringing attraction to our market. The ISA right now is a protective law that will protect both operators and investors in the market.
Okay, so I think we are done, but I'd like you to just say one thing. I don't know, one key information that you want to pass out, while I also add that if the settlement cycle, becomes faster, what does it mean for, liquidity, volatility, and of course, investor behavior?
Let me quickly respond to that one.
Okay.
With the transaction system we are operating now, there will be more liquidity in the system.
Oh, see.
And then there will be attraction price-wise. What that suggests is that you can buy something at 10 naira and you are able to sell at 15 naira in a day. You can imagine if you buy something 10 naira, by the close of business, you are selling it for 15 naira. So you have made an appreciation, a gain of 5 naira. And there's no business that can give you such gain without itches. So that, I think, is a good story, is a good news for all investors because of the transaction system that we are operating. And what I would tell the investing public is, in spite of all these regulations, in spite of all these new system reform and what have you, that is not enough to say that you should not have a better understanding of the markets. And also for you to know that it is a long-term market. Key, number one. Once you believe that capital markets is a long-term market, you would have enough to play around with. Of course, you can make gain from the short end or the medium end, that notwithstanding. But you must be sure that it is a long term. So if you are projecting into the market, that is, if you want to come into the market, you have it behind your mind that you are going into a market where, one, is a capitalistic market, two, is a long-term market that will make you to either stay for a benefit or the other. There is the benefit of dividend, there's the benefit of price appreciation, and there's the benefit of bonus issue. So all these things, you must have an understanding of it.
Okay.
Otherwise, it will be difficult for you to operate in any market, so to say.
We've actually run over our time. Well, in a way, it looks like it's a technical thing, but of course, the conversation has been really, really interesting, and I want to say thank you so much for your time. Thank you for the insight, for also the beautiful conversation, and I want to believe that some other time we'll have the privilege to call you and you would answer. Thank you so much. We appreciate it.
It's my pleasure.
Yes.
Thank you for having me.
And yes, that's it. In case you never knew, now you have an understanding of what the T+2 cycle means. And great, yes, and that's it. While it serves as a critical role in mitigating risks today, represent a temporary stop on the part of financial efficiency, the direction of capital markets is clear, faster, safer, and more integrated settlement. And our guest has highlighted the call to action. All hands must be on deck to set the pace for the future of cross-border investment flows in Africa. And that's it. Until next time, we'll see you again on Across Borders. Don't forget to follow us via social media platforms at SOUQ News TV. Subscribe, like, and share. On behalf of the Across Borders team, I want to say thank you for joining us today. My name is Grace Komolafe, and do have a great afternoon. Bye for now.